Let's get to our floor show. What will the ban's fallout be on the United States? We've got Dutch Masters with me and Scott Fullman. And Dutch, to you first, your immediate reaction to the official ban of Russian petroleum products and Russian oil and coal and wheat, those imports now into the United States off the table immediately.
Well, we think that the commodities have been running for a while now. This doesn't help the situation in terms of commodity prices. We think they're going to continue. Of course, we've been pretty bullish on commodities for the last year at Carnivore Trading. So that and fertilizer and marine shipping is really where we've been making our money. So I think this is going to be a continuation.
Well, a couple of things we're seeing here, Scott, in the markets. First off, you're seeing a selling off of treasuries again, and I think there is kind of a feeling in the market this could be a dead cat bounce today, actually, because we've seen so much volatility in the last day. But, you know, oil in particular, it's up 58% year to date. The fear was going into this announcement from the president today that would further crunch the supply for global oil and could possibly hurt the global economy. Are you worried about either of those things, considering the reaction that we're seeing after the fact in the markets on the president's announcement today?
Well, the fact is that it is going to have a bit of an impact because we saw last week that the inventory levels had dropped. But here's the thing. In the United States, only 1% of the consumption in the United States comes from Russia. So the fact is, I think it's more symbolic for us than it is economic, but add on to the fact that oil prices have been rising, and that just gives it a little bit more of a nudge. The fact is, we're going to remain under this constrained supply for a bit of time, and we should expect that we're going to have to pay higher prices, at least for the next several months. The big question is how deep does it go into the summer driving season? And that's something that a lot of people are watching. And let's remember one other thing. Aside from other commodities, crude oil is linked to almost every single thing in our economy. Food prices, things that we buy at the store, just traveling to and from work. Look, the fact is, oil is a real major thing, and it's the thing everybody should be looking at, the first thing they should be looking at every day.
Yeah, well, and also, you know, Dutch, if you look at, in particular, what we're seeing on the commodity space, I mean, his point is well taken here, and that was my question about the global economy and the U.S. economy, because, Dutch, we're already sitting at 40-year highs for inflation. We're going to get the CPI number on Thursday. We're expecting 7.9% year-over-year for a read. Again, that's higher than January. So Americans going into the war in Ukraine were already feeling the punch, if you will, of high cost. And what does this do to GDP for America?
Well, this does exacerbate, those pricing issues, and I agree with Scott that, it's going to extend out for a little bit longer. I mean, if you really look at what we've been able to enjoy in America is commodity prices have been pretty low relative to other asset classes for a very long time. And I'm talking about 2-3 decades. So we wrote an op-ed not long ago, and the title of it was, "Everything's going to cost more forever." And we think that, is all of this going to come back? Are meat prices going to fall all the way back to where they were? Is oil going to come back to where it was? We just don't think so in many, many of the commodities.
All right. Well, and hopefully, I hope that you are right. I think the U.S. consumer hopes that you're right. Scott, before I let you go, I want to bring up the issue of a death cross. And we don't talk about that a lot. It's a technical term, but it's when the 50-day moving average falls below the 200 moving day average for the major indices. We're seeing that right now, unless the Dow gains about 1,300 points today, which it will not be doing. Is this another sign that we've got further to fall if we do indeed hit that death cross today?
Well, first of all, it shows that the technical damage that has been actually done to this market, and it's really a great reading of that, and it shows the pain that investors are feeling. But the other thing is, I think that you really do need a confirmation of it, and I think, we will wait a couple of days and see if it holds there or not, if we turn back up. Look, the market's come down a lot. It can bounce a lot, but we're not going back to the highs anytime soon, at least unless there is some resolution to the conflict. So the fact is, people really need to be patient and deal with the volatility. But again, there's buying opportunities out there for the long term. You just have to have some staying power and a little bit of nerve to hold on.
Well, and my colleague Charles Payne said that as he sent the show over to me, was that you've got to look for opportunities because somebody out there right now is buying because they saw lows hit again for the Dow, the S&P, and the NASDAQ. And this is what a market is, and we're in the throes of it. Dutch Masters, Scott Fulman, guys, thank you very much. Appreciate it to both of you.